Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and today I want to take the time to look at some of my recent activity in my portfolio. If you guys do enjoy this type of content, consider subscribing to the channel. I'm on my way to 2K and it helps me out a ton. Now in this video, I want to talk about a recent buy in my portfolio. I've not only been adding to an existing position, but I also opened up a new position in a new company, which I want to talk about today. And also I've been selling some stock. I sold one of my positions, not entirely, but almost all of it, and we'll cover that today as well. Now my goal for this video is for it to be a more casual recap style video. I'm recording this Saturday night and I'm expecting to post this Sunday morning, so I really had a very busy week this week and didn't have any time to record. I was planning on not posting a video this Sunday because I just could not find the time to do so, but I did purchase a new stock and I did sell some stocks, so I did want to cover it in this video real quick just to keep you guys updated and to be transparent with my subscribers. Now, since I don't plan on making this video too detailed, let me know down below if you have any questions about these buys or sells, or if you want to see another video in the future talking about them in more depth. Now, I'll try to keep the video brief for you guys, and with that being said, let's take a look at my portfolio dashboard. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. In total, I have invested $34,470, and you guys can see that in the past couple months, this number has climbed up a ton. I've invested almost $9,000 this year, or actually a little over $9,000 this year, and my goal for the year is about $12,000, so we're quickly approaching that goal. Now, I'm definitely not forcing myself to invest just in order to hit that $12,000 goal, but I have been looking more diligently at opportunities, and I think there are some within the market right now. Now, although these are not the discounts that I was quite hoping for, these are still some pretty solid discounts on some very high quality companies that I've been taking every opportunity I can to load up on them. Now, currently my cash position still sits at about $7,000, so if there is some big dip in the portfolio, or I should say in the stock market, I can actually expect to be adding a lot more money to the portfolio during that time. Now, I am a little bit nervous that I'm overcommitting here just a little bit by investing in 2024 and not just waiting for January, the new year, because people might be selling stocks at that point. But for now, as I see opportunities, I'm going to take them. And if it drops more in the future, I'll just load up more on those same stocks. My portfolio value is inching closer to 50K, and this is not including the money that I kind of got back from selling my position in one of my stocks, and my unrealized gains are at $14,238, or a 41% total return, which has come down because both the market has come down, but also as I've added more money to the portfolio, my cost basis of course tends to go up. In total, I have earned $13.40 in dividend income so far, and at the end of the month, I'll cover all my dividend income for the month of December, and we'll see where it's sitting by then. But my yearly projected income going forward is $785 per year, with my current portfolio yield being at 1.61%, or a yield on cost at 2.28%. Now, without further delay, here is my recent buying activity. You guys should know if you follow the channel that I have been buying up Booz Allen Hamilton stock, and the stock price did dip once again. So at 138, I bought 2 more shares, and at 135, I bought another 2 shares. So in total, the order was about $546. Now, I already built what I would consider a full-size position in this company, but if the stock price continues to dip down, I'll probably just continue averaging down my cost basis because I think this is a solid company with a good runway for growth ahead of it. Now, if you guys want to see all my purchases into Booz Allen Hamilton, first of all, go check out this video that I'll pin right up here where it talks about my initial buy of Booz Allen Hamilton. I go into much more depth of why I decided to purchase this company. And 2, you can check out my Patreon where I made a post for free members that shows all my buys into Booz Allen Hamilton so far. Now, the big news here, of course, is not actually Booz Allen Hamilton. I just want to show you guys that real quick. But on the 12th and 13th of December, I bought Uber. I opened my position on the 12th for 8 shares at $61.63. And that was about a 1% position in my portfolio. And on the 13th, I added 5 more shares at right around $60 per share. And that increased my portfolio position to closer to 2%. Now, right now, I'm still not sure exactly where this position will end up in terms of size. I put it in my speculative section, although I don't think it's very much of a speculative company. I just put it there because it does not fall under my dividend category or my ETF category, so it kind of goes with the rest of the stocks that don't fall under those 2 main sections. Now, in total, that section makes up about 10% of my portfolio, and we'll check it out in a second on the MyPie section of my spreadsheet. But before we do that, let's take a look at my sell history. You can see here I sold Coca-Cola and Union Pacific. I did make videos on each of those sells. If you guys want to check them out, I'll pin them up right here. But for Tesla, that's our main focus here today. I sold 2 more shares on the 5th of December. And of course, the stock price has ran up since then, but I still sold them at a pretty nice gain. $371 per share. My original pay price was $156.61, with my total sell being $742. Now, in terms of total return, for that sell, I made a 137% total return, which is pretty solid. Now, before we get any further, let's take a look at my portfolio holdings section, and we can filter out to just see the 3 stocks I talked about right now: Tesla, Uber, and Booz Allen Hamilton. Now for Tesla, it is my number one position in terms of total return right now, up 211.59%, which is absolutely crazy. I've basically tripled my value on my original investment into this holding. Now, without going into too much detail, I do think that Tesla is a very strong company, and that's not necessarily why I sold it. The reason I sold it is because I bought it at $140 per share when it dipped down very aggressively. In the past, I noticed that the stock tends to be very volatile, so it'll dip down very aggressively, and then it'll climb very quickly, only to dip down again, and then climb, and then repeat that same cycle over and over again. This time when I purchased it, I decided that if the stock price goes up high enough, I would take some gains on the position just in case the stock price decides to dip down once again. Now, of course, could this position keep skyrocketing to the moon and never come back down? Yes, of course it could, but I'm perfectly fine with that. To me, Tesla was never necessarily the longest term holding. That's why it's in my speculative section of my portfolio, and it's meant more of a trade, and then potentially I might hold it long term if I can get it back again at a good price. If not, I do believe that there are other high quality businesses that I'd prefer holding over Tesla for the long term. Now, the reason I kept one share is because I wanted to keep a small position in the company, and the other reason is because it hasn't even been a year yet, so I would have to pay short-term capital gains on this share, whereas the other two shares I was holding for over a year, so I just paid long-term capital gains on them, which is much lower. Also, I am curious to see how they'll do in the next earnings report, and if it goes very well, I might sell this share as well in the meantime until we see where the stock price trends in the long term. Taking a look at Uber, right now I am down a little bit at 1.75% in the red, which is not too bad at all, and my position is about $793. And last, we can see here Booz Allen Hamilton, almost a $3,000 position in terms of how much I've invested, but unfortunately with a 10% decrease in stock price, I'm at about $2,692 of current portfolio value. Now, when I started investing in this, I was not expecting to make it such a big position right away, but the stock price continued to dip down, and so I took opportunities where I saw them. So we'll start in reverse order on Google Finance here, and we can see that for Booz Allen Hamilton, they were actually trading pretty well and doing very well the business itself, and then it crashed very quickly, basically overnight, down over 20%, and that's where I started my position in the company, I think at around $150 per share, maybe $155. Now, I did start a very heavy position at $155 because I was happy to buy it at that price. I decided that if the stock prices continue to go upwards afterwards, I'd rather have a big position now than buy only one or two shares and regret not buying more in the future. As the stock price continued to dip down to $137, I bought some more, lowering my cost basis just a little bit, but it was already a pretty heavy position. I decided to call it a day for there. Now, following that, the stock price increased pretty quickly again, back to $150 per share, which I think was still below my cost basis, but it was much higher than I was buying here at the bottom. And so I decided to hold off, and I decided that if the stock price continues to dip down afterwards, I'll buy some more shares. Now, as you can see right here, the stock price did dip back down, and because of that, I was rewarded nicely and was able to add more to my position. So it's very important to remain patient in the market. A lot of times opportunities will continue to arise more than once. Looking at the 1 year performance, we can see that at some point they were up very well, up over 45% at the peak, but since then the stock price has dipped down, causing their total return to come down to about 7.38%. In the past 5 years, they've been performing well, and their long-term history has been pretty strong as well, only IPOing in around 2010. Now, Uber saw a pretty significant drop in the past month, down about 16% from its peak. In the past 6 months, we can see this picture a little bit more clearly. It peaked at around $86 per share and has since dropped down a pretty substantial amount, down over 30%. Now, a lot of the reasons for this drop is because of the fears around Waymo and Robotaxi. They could potentially eat into Uber's business, and that would not, of course, be good for the company. Now, the reason I decided to invest in Uber is because I do believe these fears are overblown, and that's not a very popular opinion right now, so I might get bashed in the comments on this video, but I do believe that that's true. Even if Waymo and Tesla were to start eating into Uber's business, it would take a pretty long while, I do believe, till it was anything substantial. Now, another scenario that could work out really well for Uber if it did happen is if they were able to partner with Waymo or Robotaxi. In this case, Uber would be able to replace drivers with self-driving vehicles, and that could be very profitable for the business if it were to happen. If not, I still see a scenario where Tesla might want to sell Robotaxis directly to Uber, and Uber could still implement them in this fashion if that were to happen. Now, only time will tell how this investment will pan out, and let me know down below whether you agree with this investment or whether you're buying Uber yourself. Now, in the past 5 years, the return are not too bad at all, and if you bought it after the crash in 2022, you'd be sitting on some pretty nice returns right now yourself. Last, we do have Tesla, and they have been performing amazing in the past 6 months. I bought them around $140 per share, and we can't see that on the 6-month chart, but if we go to the 1 year chart, we can see here that it actually was basically the bottom that I bought it at, and that was not intentional, it was accidental. I thought 140 was a nice price to buy it at, so I set a limit order for 1 share, and I was hoping it would dip further so I could pick up more shares, but of course it shot right back up afterwards, and has since increased pretty substantially up that 200 and something percent that you saw in my portfolio. Now, the rally started back here basically in April of 2024, but we can see that it continued very strongly for the rest of the year, and then after the elections, there was some really big acceleration in stock price appreciation, up like 80% since the election itself. Now you can see right here the price to earnings ratio has been getting pretty rich at 119. It is some pretty insane valuation right now. Now taking a look at the 5-year chart, it really shows just how volatile this company is. From 2019 to 2020, it had some absurd growth, up over 1000%, which is crazy, but since then it has had some pretty suppressed growth itself. Investors who purchased the stock in the 2021 highs would be left in the red up until very recently when it finally surpassed that record once again, I believe this week. Now for a lot of this time period, you'd be left in the red with no dividends to make up for it whatsoever. Now with how volatile the company is, I think you guys can see here some really good opportunities for buying. People who bought in 2023, 142% right there total return that could potentially have happened depending on what price you bought it at. And the same thing here, I think this is where I bought it around $140 per share, and then you can see how quickly the stock price has been increasing. Now I do have faith in the company, but I just think that too much is priced in at the moment for me to hold such a large position in Tesla. With the price appreciation, it was getting a little bit too heavy for me. And we'll take a look at my pies real quick so you guys can see my different distributions in the portfolio. So taking a look at the My Pie section of my spreadsheet, we can see the 3 different sections I have here: key to success, divine, dividends, and speculative, and each are broken out into their target allocations and their actual current allocations in my portfolio. My key to success section is supposed to be my foundation in the portfolio, and it's supposed to make up about 50% of my portfolio, with it being composed of the ETFs VOO and SCHD. Now currently it does sit below that because my divine dividend section, which holds my dividend paying stocks, my dividend growth stocks I should say, is what makes up the majority of my portfolio right now at 48.7%. Now long term, I do plan on rebalancing this, but I'm not going to be selling stocks in order to rebalance. I'd rather just add into new positions. Now my speculative section, which is more of a catch-all section, is supposed to be about 10% of my portfolio value, and currently it's sitting at 8.2% after I sold off my Tesla positions. Now ignoring these sections right now, we can see that Uber makes up 1.6% of my portfolio value and Tesla makes up right under 1% of my portfolio value as it currently stands. Now I don't mind having Tesla as a larger position, but I'm not comfortable with it at its current elevated levels. Now for Uber, I could see myself making this about a 3 to 5% position in my portfolio. Right now I have some wiggle room, about 2% that I can work with, and so I could probably add a decent chunk more into this position if I decide to do so. Now I think I might make it a 2% position regardless of where the stock price goes, because that's kind of my minimum for new positions these days, unless they're really speculative, kind of like my Intel position right here. But depending on where the stock price goes, if it dips down very aggressively, I might go all the way up to 3 to 5%, depending on how I feel. Now real quick before I end this video, let's hop into Seeking Alpha and see how they're doing financially. Looking at their revenue, we can see that their revenue has been increasing pretty nicely over time. The 2021 to 2022 acceleration was crazy, but 2022 to 2023 was a little bit slower, so we'll see where their 2024 puts them. Now for their per share metrics, in a lot of big companies, especially the big tech companies, you'd expect to have their per share metrics look a little bit better than their regular metrics, but revenue per share actually looks worse than the regular metrics, and that's because their average shares outstanding have been increasing over time. Now, one reason that could be happening is because of their large amount of stock-based compensation, which is something that does concern me about this company just a little bit. Now, we can see the stock-based compensation details right here, and you can see that it is very high in 2019. That's because the company IPO'd that year, I do believe, and because of that, they actually probably gave a lot of stock-based compensation to their executives and also maybe some of their other employees at the company. Since then, 2020 was much lower in terms of stock-based compensation, but it was accelerating very quickly in both 2021 to 2022 and 2022 to 2023. Now for me, quick acceleration in stock-based compensation is not a great sign. You don't want to be diluting shareholders, but you also don't want to be eating into free cash flow too aggressively. Right now, the stock-based compensation I think makes up around like 40% of free cash flow at 1.8 billion. That's a very large amount. Now, if I instead set it into quarterly metrics instead of annual metrics, we can see right here the stock-based compensation has actually been going down slightly on a quarterly basis. Now, had this continued going up as aggressively as before, I would probably not be investing in the company right now, but I do have hope that they plan on reducing the stock-based compensation going forward. Now, if Uber is able to continue decreasing their stock-based compensation on a quarterly basis going forward, then their free cash flow metrics are going to be improved very significantly from this. Looking at their free cash flow per share on a quarterly basis, we can see that's been increasing pretty quickly every quarter, and I do think that their stock-based compensation going down has a lot to do with it. Now real quick, on an annual basis, we can see that their free cash flow used to be negative in 2019, 2020, and 2021, and 2022 is the first year they posted positive free cash flow, and the same can be seen for 2023. Now if the free cash flow continues to aggressively increase, I think the stock price will follow pretty quickly. Now, as I did expect, I got a bit carried away and this video is going to be way longer than I wanted, so we'll see if I'm able to get it out by tomorrow morning. But real quick, while we're already here and already over the time limit that I wanted, let's take a look at Google real quick. I was purchasing some Google shares when it dipped down to 165, which is around right here. And you guys can see how quickly it's been increasing. It's already up 15% from those lows, so I just wanted to show that real quick. And for any of you guys who bought Google yourself, congratulations on the gains. Hopefully it continues to go up from here. As always, that does bring us to the end of today's video. I really hope you guys enjoyed seeing my recent transactions on my portfolio. Now, if you did make it this far into the video, let me know in the comments down below whether or not you agree with my purchase of Uber and my sales of Tesla and whether you're buying Uber stock yourself. If not, let me know what other stocks you're buying or selling right now before the end of the year. If you haven't yet watched last week's video where I talk about 3 stocks I plan on buying in 2025 and 3 that I plan on selling, check out this video right here. And if you want to see my dividend income for the month of November, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank you all for watching, and I will see you in the next one.